This is Chanel Bunger with the Becker Private Equity and Business Podcast, and today I'm delighted to speak with regular guest Matt Wolf of RSM, who joins us weekly to share an update on economic trends that he's keeping an eye on. Matt, thank you as always for joining me. Why don't you take it away and tell us about some of the things that you're seeing out there?
Yeah, thanks, Chanel. There's been a lot of economic data release. It's every week seems to be a big economic data release, and we talk about it a lot on this show. And I thought maybe I would revisit a topic that we have talked about more recent, or haven't talked about in a while, which is commercial real estate. And I know that that we're starting to hear kind of people come back to this and talk about, oh my gosh, is what's going on in commercial real estate, or are we sitting on another bubble that's going to plunge the economy into chaos? And the reality is we don't think so. Yes, there was a large $500 million bankruptcy announced the other day of a very large private commercial real estate portfolio. We keep hearing about trouble with commercial real estate in core business districts and things like this. But I think what we're sort of cautioning clients and other investors, decision makers, leaders to think about and understand is that we're switching into a new regime where we aren't going to really experience, or we're less likely to experience, the kinds of binary events that really shaped our perceptions over the last 15 years, right? 15 or so years ago, we had the global financial crisis where the credit cycle turned over very quickly, right, in the matter of months, frankly, which is, a very quick change in trillion-dollar economic terms. And then we had the pandemic where, large swaths of the economy literally closed overnight. And so we have this sort of lived experience, this trauma almost. And so when we read things like this about potential problems with commercial real estate assets, and the question is, oh my gosh, is this bubble going to burst? Are we going to go into another recession overnight? And the answer is probably not. It doesn't mean that there isn't problems or risks within those portfolios. But the way to think about it, we have to understand that it's going to take time for these to work out. And we're beginning to see some of the problems with commercial real estate work themselves out, but it's not going to be necessarily an overnight thing, right? There's going to be ebbs and flows and different sectors, different portfolios experiencing trouble at different times as different borrowers need to refinance at different times at different rates, or different types of properties experience different struggles at different times, right? So commercial real estate that is maybe a warehouse heavy portfolio in the center and like based in the Midwest will experience very different economic pressures than would a high-end retail portfolio based on the coast, for example. And this will sort of have a staggered effect as all of this works through the economy, which does likely help mitigate the risk of a sort of this binary event where, oh my gosh, commercial real estate, just implodes, right? Because they're going to work through this sort of debt refinancing, debt restructuring, buying and selling properties, exiting underperforming properties at different times, at different points, which helps sort of de-risk that a little bit. Doesn't mean that there aren't risks. It just means that we're not likely to see some sort of binary event where the entire commercial real estate environment implodes. And we have to think forward and understand that sort of singular implosion is just much less likely in this new economic environment that is much less dependent on monetary policy than the past is, right? And that the past is that's what's shaping a lot of people's view of the future, and we don't agree. We don't think that is the right way to think about it in this new regime where things like fiscal policy and inflation are more important than monetary policy. We're not, I guess I shouldn't say we're not going to see those sort of binary events, but it's just so much less likely to see them. And what we expect to happen, and really across the ecosystem, but certainly within commercial real estate, is again, this sort of staggered events as different types of portfolios, different borrowers, different lenders work through, refinance their debt, sell underperforming properties, buy new properties at different times. And that's how we have to think about it going forward. So when we see the headlines of of what appears to be a large bankruptcy in commercial real estate, we need to understand that it's not necessarily the sky isn't necessarily falling.
Perfect. Well, Matt, I want to thank you for sharing these insights into commercial real estate. We'll have to follow up and see how things evolve in the coming months. And I also want to thank you, as always, for joining me today on the Becker Private Equity and Business Podcast. Thank you.
Thank you.